Welcome back to the PRIMETIME Podcast. I am your host, as usual, Marcos Cabral, Charlie Suarez, George Acosta, and with us today, William Ledesma. Welcome back, Willie. It's been a very long time, buddy. We've missed you.
It's been a long time.
You've been way too busy for us, and I do not appreciate that at all one bit. For those who are looking at the scenery behind us, yes, this is the new studio. And thank you, Mr. Charlie Suarez, for putting this little thing together right here. Appreciate you, buddy.
He threw in the Chuck flavor.
There we go. It's home away from home.
He sprinkled just a few things. He did an amazing job, and
I feel like I'm in a combination of I don't know if I'm waiting in line in
it's like
Disney,
a nightmare.
in Disney.
No, it's a nightmare.
I don't know if I'm waiting in line in Disney on a fun ride or if in my son's room with all the heroes. But I actually like the vibe. I have the Star Wars over here.
This is when you binge watch a lot of like cool movies for the weekend, and then this is what you dream about on Sunday night. Everything's just coming at you at once.
One of the girls actually commented that they're like, well, it's a little too boyish for me. I can't do a podcast in it.
We're gonna throw a pink ribbon. Right
Charlie,
here.
you forgot to add flowers and
It's
rainbows.
right there for everybody.
No, Marilyn Monroe's right there.
No, we're not inclusive of.
Actually, I didn't even see the Marilyn Monroe.
Charlie,
Did she see this?
No, I don't think she
It's
saw
right
that.
there. There it is.
yeah,
I
that's
did
good.
not see it. No,
The flowers right there.
and there's a flower right there. Listen,
on.
you did an amazing job.
Thank you.
This looks unbelievable. So we appreciate you, buddy, for taking the time
Thank you.
to do this.
We wanted to take
for
it
the
to
show.
another level, so I put my memories back. You know, as you guys say, I'm an old man.
I love it.
And it reminded me of a lot of good things since a childhood and the new things coming up. And George was a big, or was it you, Marcos, Star Wars fan?
I'm actually none.
But
Listen, I love it regardless.
I love it.
actually
There you go.
It looks amazing.
I'm in the wrong podcast room.
So,
I'm at the wrong podcast room. I'll be back.
A lot going on. Let's jump into a
lot
couple of
going on.
topics.
It's been a while since we've been back here, so it's definitely a lot to catch up on.
Rates have shot up another 2 points since the last time we spoke. I think it's been 2 weeks and it's shot up. No, I'm just kidding.
The world's falling apart.
It's a joke, but it's not a joke.
Yeah. So rates are obviously every time you look up and you run a new pricing or you look at the mortgage-backed security market, you see a huge dip. It's like every other day now, I think. And we've been talking about it since the beginning of the year, obviously since we started the new season and the new show. Every time we come on here, we're constantly looking back to look forward. I think we referenced 2007 a lot. I think 2022 looks like a lot like 2007. Recession is becoming obviously every day is becoming much more of probably realistic that's going to happen at the end of this year. I think we're all going to agree that recession is probably
It's looming.
very closely.
It's starting to look like 1970s again. You guys were not around at that time.
No, I wasn't born actually.
I know, but I'm saying it's starting to look a lot like what happened in the 70s, where it was a perfect storm brewing, and it looks like it's starting to happen again. So,
Yeah.
So today is the gloom and doom Armageddon show for those that haven't figured it out.
I came in here with a great attitude, and now I'm about to cry.
I want to go home.
I thought we were going to call it the reset.
we're going to find a solution to everything. That's why
There's always a solution to everything.
There's
I think
always a solution.
That's one of the takeaways
Listen,
actually.
never let a good crisis go to waste.
Exactly.
Yes,
Absolutely.
sir.
And at the end of the day, this will create opportunities regardless of whichever way it goes. So we're ready for whatever comes our way. And we've seen this thing before. We've read this book before. So whatever goes, happens. But there's just a lot going on that's kind of causing all of it, right?
Well, but how lucky are
it's
we?
different.
How lucky are we to be in the best state? Let's agree that we're in the best state of the nation.
100%.
If you want to be in a state
That's been
when the
fact-checked.
shit hits the fan, you want to be in Florida. I think that's. Tell me,
I agree.
it's not.
I agree.
Absolutely. When shit hits the fan, you just go out to the beach, get a nice tan,
Yeah, we got great weather, great
great
food,
weather, great food. You know, it's
no state tax.
no state taxes.
And if everything goes to hell, we can live on the beach. That's pretty good. You wake up to the sunset every day.
That's right.
So inflation obviously is having a big impact on everything that's going on with both the stock market and our interest rates. Where do you think, kind of what's in the news right now is this new $5.8 trillion budget proposal that's glooming. How much is stuff, I don't know if you guys have read it, how much stuff is in there that's going to further impact inflation?
Well, there's a lot, right? I mean, the first one is raising the corporate tax rate from 21 to 28%. So what kind of impact do you think that's going to actually have, right? When we're already kind of battling so much, what do you think raising the corporate tax rate from a 21 to a 28% will do to the market, right?
I mean, there's different theories in that, but I'm a firm believer that you raise expenses on anybody, they're going to come up with a way to cover those expenses. And one of the fastest way to cover those expenses is to raise
prices,
and raise the cost of goods that they're producing, which gets trickled down to the average consumer, which makes things much more expensive and
which
inflation.
adds to the inflation.
Exactly.
And cut expenses by letting go of employees is another one.
Not only that,
That's what I was gonna go with. Like, how does it impact like the little people? You know, like at the end of the day, if I'm making less money, I gotta pay less, and I really can't pay less because they're trying to raise the minimum wages. Now you gotta lay off people or go more.
But then it's the whole thing, right? So
It's a
I got to
domino
pay
effect.
more. So I got to raise my prices to the consumer. I can't pay the people more, which are in essence going to be those same consumers. So I mean, it's like it's the same vicious circle.
and if you're a company where now you're in a position where being in a country where it's not as friendly with taxes, what do you do as a company? Do you relocate to another country that's more tax friendly? Like, for example, Ireland. I've been looking at Ireland every day. Ireland has a 12.5% corporate tax rate, so which is almost half of what they're thinking. And so whether they raise the cost of goods to cover the 7% hike, or they just lay off jobs because to decrease salaries, which hurts the employment numbers.
Right.
It's just I mean everybody has their own side of the political aisle and where they stand on it, but I just think that from a mathematical standpoint, things get more expensive. You have to figure out a way of covering for that additional cost.
But what's the mortgage industry like in Ireland, though? Like, how do we get licensed?
I don't think there is one. There's a farming industry in Ireland.
No, there is.
There's a mortgage industry.
That's what we have to look up. We have to get licensed in Ireland immediately.
Something also pretty crazy is obviously, and I'm not too keen on what's the specifics of the so-called billionaire tax, but they're thinking of
Well, what's your tax like?
what's their tax like?
You know, your firsthand know what kind of tax that is.
You billionaire, you.
The billionaire tax. I just feel like there's an attack all around on the individuals and the entities and the companies that create jobs, and maintain the stock market at a certain price point. I think that if there's an attack on all angles, it is in my opinion, I think that it is a perfect storm for how to get as much money out of the system. I mean, if you're a billionaire and you're going to get, do you move your money around? What happens in those situations? I guess I don't even think. Do you think it's going to get passed the budget proposal?
I don't know. It's right now. I think it's what's going on in the Senate and in Congress. It's 50-50. One pulling one way, one pulling the other way. It's something that if you look at it in details, there's a lot of stuff there. There's a lot of money that's going to be spent, useless money being spent again, money that is going to things that really doesn't have anything that really the public wants out there to have. Then you're going to have a lot of issues too with tax. They have the new stock market thing that they want to come up with. For unsold, they want to tax you for an unsold stocks to see what happens. Well,
what is it called? Something on
If you have, I think
Unrealized
what he's
gains?
referring to.
Unrealized gains.
Unrealized gains. So
I think it's over $100 million.
So you're going to look into a crystal ball and realize and think, hey, well, he's going to make this much. I'm going to tax you for it. So you're getting taxes before it actually does happen. How do you think that's going to fly?
Let me
What's
ask
going
you
to
a
happen to
question.
Wall Street then? It's going to disappear because you're going to be taxed.
Well,
for
if you get taxed, I mean, let's take us for instance, right? Everybody here invests here and there, right?
Yeah.
If you get taxed on unrealized gains, are you gonna continue to keep your money invested?
No.
I mean,
Absolutely
at that point,
not.
you're just gonna sell your stocks and just pay whatever it is.
You're gonna realize your gains.
That's the reason.
and,
That's the reason why you wouldn't realize
Yeah.
it, is to kind of just keep it in play and let it, So if you're gonna get taxed on it, I just don't see how that could. I don't know if it'll get passed the way it is. If it does get passed, I feel like there has to be adjustments because it just doesn't make.
No,
any
but
sense.
I do have a question because every part of this, I look back and they're looking at see what happened last year. So let's just say Florida, for example. Everybody moved from Florida. I have people from Canada, Chile, Brazil, even from New York coming over here for lower taxes, whatever. And now I think the corporate tax rate, I looked it up, is 15% in Canada. So I was like, where would you go? Won't you just go to Canada, right?
Well, you got to look at different.
What I'm trying to picture is everything that they're doing is kind of to slow down what happened last year. So I'm going to segue into the 1031 exchange because they're slowing down investors from investing in real estate to allow primary home buyers. They're slowing down people from the stock market because a lot of people made a lot of money in the stock market that aren't paying taxes last year. It's like they're trying to slow down any positive thing that happened last year.
Well, that's another one that's in the proposal. So I know you kind of segued through it, but I mean, let's explain that because we're all in the real estate industry here. They're literally trying to end the 1031 exchange as part of this bill, which is huge in this market. You know, I mean, it's what, I mean, most real estate investors take advantage of it. Can you imagine them taking away the 1031 exchange? What will it do to the real estate industry? All right.
It's what they're trying to do. They're trying to slow it down. What happened with a couple months back when they raised the rates for investments and that type of properties?
Do you think with the high increase in rates, I mean, we saw rates jump from the threes January. We're at the end of March, heading into April, and now we're looking at some of the note rates getting open up in the fives, and I think sixes are around the corner, obviously. With
Quickly.
such a high, So what happens to valuations, of property valuations towards the end of the year? Do we expect a decrease in valuations of properties because affordability factor's not there? Is it going to be just based off of state, you know, like it's maybe you'll have a price correction in New York, but you may not have it. You will have a price increase in Florida because it's just an attractive state for everybody. I would say globally at this
Some
point.
will probably suffer, some will probably won't, but the affordability is going to be an issue. We talked about this on, I don't know, a few podcasts ago when our rates were still in the 2s, 3s, right? Where we're like, okay, home prices are appreciating at this rapid pace, right? So you got a property before that used to sell at $300,000, and a year and a half ago, it's selling at $500,000, right? But the $500,000 you're getting in the high 2s rate, low 3s, so that affordability it makes sense, right?
Payment wise.
Now, when you got a rate in the 5s, a $500,000 house is not so attractive anymore. You don't really qualify the same as you used to. That's where it'll take a hit. Right, the home prices have to adjust, because then who's going to be able to afford it unless we're going to go back to stated all over the place? But
I mean, this
becomes an issue.
A natural thing that happens. So I was talking about that a townhouse that I saw that townhouse by size and by when it was built, it should be worth, let's say, $350,000 a year and a half ago. Those townhouses were selling for $180,000, right? I know because one of my clients was going to buy one, and then they ended up buying a house like down the block, smaller, for $350,000. That townhouse today, because people didn't want to live in that neighborhood before, now want to live in that neighborhood, is $380,000. It's worth as much as the house, but before it was worth half, right? So what's happening is that naturally we always go through, I guess, gentrification or whatever. People move into undesired neighborhoods, and that comes up. It just happens so fast. Like this townhouse went up more than 50% basically in a year.
You got a lot of money. You have a lot of money being pumped into Florida from everywhere.
Catch a lot
From
of cash
everywhere.
purchases.
We have
30%.
LOs have been trying to secure LOs. They have been trying to secure their own properties as primary residences, where they're offering $10,000-$20,000 above asking price, and they're getting beaten out cash by outside investors. You got people from, if you're going to have a huge devaluation of currency in a country where there's going to be a radical shift, and we're seeing this in every other country, just about every year now. There's new radical shifts in countries, and I'm not to get into specifics, but when you have a radical shift in a state or a country, and you're especially in a country, and you're trying to pool your money, and you don't care that you're gonna just park it into a hard asset into a country, that there's a lot of cash on the street, especially in Florida, because it's a tax-friendly state, it's a conservative state, and you have the ability to, convert into dollars. When we saw that with Venezuela. If you don't take out your cash quick enough, it's worthless.
Course.
So we see that. I've seen a lot of Canadians. I've seen a lot of Colombians. I've seen a lot of Chileans investing in Florida. So I think that it's the first time that we got to kind of like dissect where, yes, there might be some price deteriorations and valuations in other states, but Florida is a very, very, very unique state.
So you think because of that we may maintain
Values.
I think so.
values may
I think
maintain.
we'll maintain. I don't think we'll see that 19.4% what the increase of the properties was from the beginning of the year to now. I don't think you'll see that happen, but I think
Because rates are going up so
right
fast.
because rates are going up so high. Because what happens is the blue collar, white collar individuals now don't qualify. because of the prices. Going back to what you said about the interest rate being higher, and this is only the beginning of the interest rates increasing. We don't know what's going to
I
happen.
do want to clarify. It's not just the interest rates. The rates going up are affecting insurance rates going up, taxes. Everything is going up. The whole because they look at us like the bad guys. Oh, your rates went up, so my payment went up. No, it didn't. Your insurance rates just went up. Everybody's calling me. Their insurance rates went up from last year to this year, and it was a big jump. So across the board, everything is going up.
There's definitely going to be a segment of the population that's going to get hit harder. Obviously,
Middle class.
every day, the middle class.
That's it. It's the middle class.
It's gas prices are going to continue to rise. It looks like that. I don't know who knows where that ends up, and obviously that affects everything else. If gas prices go up, everything else costs more. Your food is going to cost more. So affordability for housing is definitely a concern in certain.
Look at the rent.
Yeah.
Look at the national rent average is $1,813 for a property in rent. Here, yeah, we have a state which is strong and people make decent money. But what happens when you go out of Florida? $1,800 when you're getting paid $10 an hour, $15 an hour.
Yeah.
That's unfeasible for a lot of people. So it's a little bit of everything increasing. I mean, there's going to be a lot of changes, and unfortunately, I don't see anything getting better anytime soon. Things are changed. I'm sure, like Marco said, where there's always a chaos, there's always an opportunity. And I think that as we are right now in this company that we're in, and I think that a lot of opportunities will rise, but it's going to be a bumpy road.
The other thing is obviously there's, and we've talked about it in the other podcasts as well, there's been a huge help with the liquidity factor and the new products that have come out with non-QM, but we've seen how quickly those things can disappear from one day to the next, either because they get priced out of the market or just the secondary market in terms of who buys these loans says, hold on, let me just stop real quick.
Yep.
We have the very popular debt service coverage ratio products that have become very popular in the non-QM space, bank statement loans, P&L only, so from a originating standpoint, those products are necessary as we continue. And my fear is that you may be relying on those products to qualify a lot of bars, and from one day to the next, they disappear, right? So how do you think in terms of if there is a huge market correction in the stock market, how quickly do those products go away, and how does that affect the immediate pipeline? Can it go from, will it be a gradual decrease in volume, or can it just shift dramatically from one day to the next just because of you don't have those products? And how strict does the regular govy conventional products get in that atmosphere?
If you remember back, I guess in 2008, and this was this like gives me a little bit of panic attack when I remember this. It's like every Monday that I show up to the office, it was, we don't have this anymore. It was like everything was like, okay, you just dropped 25% of the pipeline, 20%. And then up to like, okay, do you have one loan? Yeah. Every Monday it was like something was so that's
true.
How fast.
You remember the mortgage implodometer? I used to have that thing up every day. And every day a couple lenders would go out of business. Every day a couple lenders would go out of business. So we were literally monitoring every day, and we're like, every single day there's at least 2 lenders going out of business. It's insane. But it's part of it, right? And I remember that because lenders were going out of business. Then you have to shift, and you kind of got to go and figure out what the next lender is or whatever it is. But then the market came to a screeching halt, right? And it like purged the industry. So many people left, some people stayed, and it kind of just cleansed it and started all over again a few years later, and then it started getting hot again. Now, does that happen again this time around?
Well, I think I don't want to be the doom and gloom guy, but I do. It's important to know what it is.
That's who he is.
It's important, and the reason I say is because it's important to know the state of the market and where we're heading and what the sense of urgency is from an originating standpoint when you're speaking to clients, and how important it is to lock in a rate before it continues to go up. How important is it because listen, cash flow is going to be king during a recession. So if you're not taking advantages of using property values where they're at to consolidate your debt and lower your monthly output and expenses, if you're not relaying that as an originator to your past clients,
well, they have to be advisors.
Exactly, you have to be more advisors. Sometimes you have to take the ability to make a decision on behalf of the client. Says, look, I understand you want to shop rates, but I'm going to lock in your rate because I know when you call me in 48 hours, this rate is a half a point higher. And I've seen situations on the sales floor where, the loan officers waiting on the okay from the client, and you guys have to be in a position where you're reading the news, looking at the market, and making decisions on behalf of your client, and being the best financial advisor in those standpoints.
100%.
Right, and using the tools that we have while they're still available to put these borrowers in a position where cash flow is better. So you're doing debt consolidations, reducing their monthly expenses, and you're reinvesting whatever equity they have into cash producing properties, so that you're reducing your output, increasing your input in cash flow, and that's gonna weather the storm in a recession, right? Because cash flow is king in that. So I think, and I have my sales meeting tomorrow. I think that we've been you guys have seen that. People are calling me the doom and gloom guy, and it's not the doom and gloom. It's
the reality.
You gotta
the
be ready
reality.
for
It's-
what's coming. Like,
Yeah, it's just
It's
or
knowing
or
where you're at.
understanding
or maybe stop saying the word recession.
or understand.
Well, it's a natural
The-
thing. and
the
maybe,
reset.
maybe that'll bring rates
No,
down.
it's just understanding the market and kind of just paying attention to what's happening. That's
Right.
all it is.
If I tell you a lot, rates are going to go up, and then the next week you say, "I thought you were joking," it's like, well, you got to be in tune with all the tools. You got to look at charts at mortgage-backed securities. You got to know what's going on. How does a $5.8 trillion budget proposal, if it gets passed, how does that affect the market? All those things are very important from a originating standpoint to know what's going on and how to stay ahead of it. And then it makes you that much more savvy when you're having the conversation with your clients who are saying, "I'm going to wait." Because your rate at 4.5 is too high, and then you wake up and it's Tuesday, and now 5.1 is too high. So right.
I want to talk about that.
And
I
it
have a
just
client,
continues.
active client right now, and we started the loan process, and I'm like, look, rates are getting up. We need to move on. We need to lock this in. Oh, no. I'm going to shop around a bit. This went on for like almost 3 weeks because he's like, no, I'm leaving. Then he'll come back. No, I'm leaving. Then he'll come back. Every time he came back, the rate was like literally almost a half a point higher. Every single time. Oh, but you said this. I'm like, unless you decide, this is what's happening.
Yesterday's price is not today's price.
But
That's what you need to say every time. The
finally,
price changed.
he went to everybody in the world. He's spoken to everybody in Miami. We're closing him next week. But
But a lot higher than what he would have.
yeah, we were
than
just
we
taking,
would've.
and we explained this to him. But obviously, we know what we're looking at. We know that we have George to let us know all
Listen,
the
sometimes
worst-case
consumers
scenarios.
are just inherently, not very trusting,
Yeah.
and they just think that,
You're out to get them.
yeah, exactly. They think it's a car dealership,
Yeah.
right? Versus, it's really,
So-
I'm
so-
being your advisor. I'm trying to show you and teach you exactly what's going
So
on.
let me put a question on the table. So how much do you guys think about the war going on in Ukraine and Russia affects us down here when it comes to all these hikes in prices and everything? What do you guys think about that?
You mean like
Because
on a
it's-
technical sense or on
no,
a
I'm
like?
talking about.
Well, they're saying
globally.
they're
I mean,
saying that
going
food shortages is going to be a thing because of the
30%,
wheat production and all that.
30% comes out of there.
So obviously, if you have food shortages, the price of food goes up, which further affects inflation, right? So I would say that's one aspect of it.
That's why they're talking about there's a perfect storm brewing. That's part of it too, of everything that's happening.
Yeah,
at the
there's
same
just so
time.
many
I
factors
thought
feeding
we
into
weren't
the
gonna
same
be doom
issue.
and gloom.
I know.
yeah.
Look,
But to that point, right? Like you
And
just said,
foreclosures. Do you think that foreclosure will be an uptick, or did we see COVID as a preview of all these
COVID.
new tools that now you
Well,
can
if
prevent foreclosure because you go file forbearance for a COVID excuse or whatever it is, and you have forbearance for
possible.
8,
That's
12
possible.
months, and so you're not really going.
I
to
don't
foreclosures.
think foreclosures would be a thing because people still need their properties. But what I do think
But if you
is
can't
a
make
lot
the-
more of that.
Yeah, if you can't
A
make
lot
your
more
payments.
forbearances. A lot more forbearances for sure. People will take advantage, and the government's already rolled that out like it's candy. So they're
but
gonna do
I
it
was
again and
reading
again.
into this
But if
last
it does,
week.
but if a recession does hit, let's say, right, you got food shortages, higher gas prices, higher prices for the consumers.
Higher interest.
Well, higher interest. But if the recession does hit, they're gonna have no choice but to bring rates back down.
100%.
for
Otherwise, the
those-
economy stops.
Right. So for those people that are actually hesitant on buying or whatever because of these higher rates, just take the higher rate, and when the time is right, refinance to the lower rate because it's gonna happen.
Yes.
If all this hits, so it's a way of kind of looking at the glass half full, not all doom
I
and
just
gloom.
think that those tools weren't available last time around, and the fact that you can just call up your servicing company and say, "Hey, I'm going to take a COVID forbearance," is that still going to be a thing? Is COVID still a
Well,
thing?
the COVID
I don't know. COVID ended once.
We're just- yeah.
Unfortunately, once the war started, which is a sad thing for Ukraine, COVID ended. You never hear. You never hear.
It is.
Now, let me ask you.
They
Now,
just don't talk about it on the
is
news
the
anymore.
is the COVID forbearance still a thing?
So that's what
Is
I
it
was
still
reading
a
an
thing?
article about this.
And if it's not, then it'll be the recession forbearance.
it's a forbearance period. There's always a forbearance.
There's always gonna be a
that
forbearance
tool has always
available.
been there. It's just knowledge. People getting knowledge. But I was reading about the foreclosures. They said the foreclosure rates did end up going up, but they did a study is that everybody who foreclosed, I guess now, where people were going to foreclose before COVID, and COVID basically bought them an extra year or two or whatever.
True.
So it's just knowledge. People learned how to save their homes. People learned that, hey, look, I'd rather own my house at whatever rate. It doesn't matter the rate, because if something happens, at least I can explain, look, something happened.
Yeah.
Can I get a deferment? Can I get 6 months, 8 months, 12 months, whatever? And rather being a renter and say, look, I can't pay my mortgage. I'm a rent. Well, you have to get out by the end of the month. So people are learning, and that's why they're saying, I'd rather always, at whatever rate, own a home.
Yeah.
Yeah, because at least at the end of the day, you at least have a fixed amount versus you have to move out because I'm renting or whatever it may be, right? So it still works out better in the long run.
So let's change a little bit and go something on some good news here going on. So what do you guys think about those Heats?
The Heat just clinched the playoffs yesterday.
Huh?
First in the Eastern Division. So it's going to be white hot playoffs all over again. So we got to figure out a way to go to some games for sure. For sure, we got to go.
I just gave up my
think-
season
I think we
tickets.
get-
So now
Who was
I
at the
gotta-
game where
So, no, but
Spoelstra
you're
lost
still
it
part
on?
of it, so you still get the stuff. I think we got to call. We got to make sure we secure the seats for sure. I think you can. I think you got first dibs anyway.
So what about
Who won the what?
What
Who was
about
I was saying who was at the game, because I wasn't at the game, but somebody was at the game.
Oh,
where
when
Spoelstra,
yeah,
and,
I wasn't there.
he threw the board. They went on a 4-game losing streak after that.
yeah?
Yeah, it's the team that.
I went to the
Things
Kings
got a
game.
little heated. I think they're good now though. So Udonis Haslem, shout out to the legend.
The enforcer.
That dude does not. I mean, that dude's like, wait, you said what? Does not care who's around. He will go at it, and they still show him so much love. We were at the game the other day. He played 2 minutes, the last 2 minutes of the game, and it's just
Yeah, I was gonna say I went to the
they were
game
loving
and
it. Everybody was
it was like
loving
we
it.
were beating him by a landslide, and they put him in. He scores 1 point,
And everybody goes crazy.
Everybody went crazy, like it was like the biggest thing ever. It was amazing.
He got a rebound. You couldn't hear anyone. Everybody was cheering so loud.
Who's your favorite player on the team? Go on the team.
Favorite player on the team right now? I mean, look, Jimmy Butler to me obviously is the
You can
best
only
player
pick
in
one.
the-
That's the rule.
Well, Jimmy Butler to me is definitely the best player in the team. He takes it for sure.
I like Duncan.
Hero.
Yeah, I gotta say Tyler Hero.
Tyler Hero, he's gonna be amazing in a few years. You know, he's still coming off the bench. He's doing amazing off the bench though.
I know.
He's doing
you
really,
see the
really good.
potential. You see the attitude.
No,
it's
most
good.
definitely.
The whole.
Yeah, most definitely. So shout out to the Heat, and we got to go to a few games for sure during these playoffs. And with that, we will end it. Thank everybody for tuning in. Appreciate you guys. Till the next one. Bye.
A la vista.